It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning from Tiger Financial News Network. Welcome to the May 30th fantastic Friday edition of today's opening bell on The Trader's Edge. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. Hope everyone out there had a great sake Thursday evening out there. I know I did. Maybe one too many glasses of sake, but hey, the weekend is just in front of us. Let's make sure that we have a great weekend. And, of course, the way that we start off our day is to make sure that we've got our daily outcomes well defined. Now, my outcome is to teach you how to master the tools for trading. And that includes the tools of the mind, folks, because when we can master the tools of the mind, well, then we begin to think like a strategist, and that's really, really important. So during the next hour, you'll hear me use terms like A to B equals CD. I'll use terms like swing points, Gartley patterns, butterfly patterns, various candlestick signals that the sign makers of the markets, the bulls and the bears, create for you and I each and every day. And each of these patterns, each of these signals on a standalone basis are what I call tactical tools. Now, knowing how to use these tactical tools is really important. But you see, the real key to trading and investing, the real key to get your money to work harder for you than you do for it, is to have a strategy. And that's what I call mastering probability, because using tactics without strategy is a recipe for failure. And failure, it's not an option in our playbook out here. So let's make sure, though, that we don't confuse the words failure and losing money as the same thing. Many people do, but they are not. You see, in trading and investing, our spoilage is money. We've got to run this like a business. If you've ever run a business before, you know you have spoilage out there. Whether it's a sales call that you planned for and you didn't get the deal out there, whether it's something that you manufacture, spoilage is a part of every business, including the business of running your home. Now, when we use stops, when we use bracketed orders, an OCO, one cancels the other order, then we've calculated everything, and if we lose on the trade, it's nothing more than spoilage from a failed trade. And that's a part of any trading strategy out there. It's what I call system expectancy. And that system expectancy really is our ultimate performance tool. It's really the thing that gives us the confidence to go ahead and take a trade pattern when it sets up. So today and every day, folks, what I want you to do is I want you to think like a strategist. Because strategists will slay the tactician all day long. Now it's time to get ourselves into a peak physical state. And we begin that process by changing our physiology, by sitting up in our chairs, by putting our shoulders back, taking in nice deep breaths of air. And we do that while we focus on one of our mastery mind tools, a tool I call, there is no difficulty that enough love will not conquer. Now on his 7th birthday, Simon Evans adopted Sam, an 18-month-old cat from an animal shelter. Sam had been badly treated by his former master, a drug addict who, had unpredictable and cruel behavior, which had an obvious impact on the cat. And as one would expect, the cat was nervous and frightened, so he spent most of his time behind Simon's bookcase. Now, Simon was a very smart boy for his age, and he instinctively knew the importance of persistence and of being gentle and loving with his new friend. And gradually, Simon's unconditional love began to pay dividends. Sam, his cat, began to move away from the bookcase for longer periods of time, and Sam would eat when Simon guarded his back. As time progressed, the boy's love turned his little feline friend into a more trusting and responsive cat. Constant, unconditional love was able to overcome even the most badly abused. Yes, folks, love is the one power that can eventually cut through all the obstacles of life. Loving, kind, nurturing behavior. It's yours and mine. It's our natural state. Each of us were born with that incredible gift. Someday after we master the winds, after we master the waves, after we master the tides, we will harness the energies of love. Then, for the second time in history, we will have discovered fire yet again. The greatest force on earth, it's love. And the wealth of nations doesn't come from its mineral resource, but instead it comes from what lies in the minds and the hearts of its people. You and I, we can harness this force of love if we listen to our hearts and minds. This is the law of life. And that law of life will lead to an extraordinary existence. Folks, have a great weekend out here. Show's over. I'm just kidding. what I want you to know, more than anything else, and I don't take it for granted, I do love being with you each and every day. Yes, folks, there is no difficulty that enough love will not conquer. It is Fantastic Friday. This is TFNN. I'm Steve Rhodes, and welcome to the show. Let's get things kicked off out here right now. We got Dow futures off about 16 points, trade out at 16,664. S&P off about 3 points, trade at 1915. NASDAQ futures off 3. Russell 2000 down a bit. King dollar off a nickel. Goldilocks back a couple bucks right now. It's trading out at 12.54. Silver's up 1 penny, trading out at 19.02. If we take a look at light sweet crude, it's back 72 cents, trading out at 102.86. Our call-in number is 877-927-6648. Feel free to give me a call. Happy to take a look at your stock chart, answer whatever question I humanly possibly can. A quick peek around the globe out here. We'll see over in Europe, the markets are slightly lower. The DAX is off about 2 points. FTSE is off 19. Last night, the Nikkei was down 49 points, assuming it was open. I thought it was down 49 points the day before. In any event, it was down 49 points. The Hang Seng up 71, and the Shanghai basically unchanged off 1 point. So where do we begin our day? Well, this is boding pretty well for the bulls. This is all that's really needed here. See this little candle that's formed right now today on the Euro-Japanese yen? So we've got this nice, beautiful 0.786 Gartley buy pattern. We just haven't had any kind of confirmation signal. Now, are we going to get the confirmation signal right here at 9:14 a.m.? I don't know. But if we did end the day just like this, you'd have a hammer candle. You'd have a hammer candle. Yesterday's candle, nah, close, but no cigar. And when it's no cigar, it means it's just nothing more than just a candle out there, no reversal signal. But today, if we Euro-Japanese yen, if the market just kind of stayed like this, that would be about the most bullish thing that that you could see inside of the market, because then the real liquidity gauge would be saying, "Hey, I love you. I'm going to turn on the afterburners out here, and this market's going to really cruise higher for this summertime rally out here." So we'll watch the Euro-Japanese yen. Unfortunately, you can't make that call right here, right now. Of course, an even more bullish candle would be somehow it would close above 138.98 out there. That would be very bullish. It's trading out at 138.62 as we speak right now. Now, can't say the exact same thing about Goldilocks and silver. If we take a look at silver here right now, silver's trading out at $19 and a penny. What it has not done, it has not tested, nor has it it hasn't tested the B point of a potential A to B equals CD to the downside. Inside silver, that's the December 31st low, $18.72. Hasn't tested that. You don't have any kind of reversal here. Silver's not oversold at the moment, so it's unfortunately it has more room to run to the downside out here. And that likely run, at least it's a test of December 31st, and because it's trading back inside that June 28th swing point, and it's been back here for quite some time, several weeks now, it really suggests that the low of that swing out at 1818 really becomes the next area of test inside of silver, unless we see some kind of reversal. If we take a reversal candle, I should say. We take a look at gold. Gold's got it confirmed A to B equals CD. The downside is what's fighting it off is it's so oversold right now. And so we've seen here for the past 2 days just really kind of a move sideways. Unfortunately, move sideways is more bearish than it is bullish out here when you've got it confirmed A to B equals CD, the downside, and you're coming into or you are traveling in an oversold condition out here. It really does say that at the moment, Goldilocks wants to probably make a low down sometime in the middle of June. I mentioned yesterday I didn't get a chance to do the work on it, but gold's got a 13.5-month cycle. Go do the work yourself. Go take out a continuous contract. Use about the middle of June, and you can go backwards if you've got a cycle tool on your charting service. And you'll see at about 13.5 months or so, you'll see that gold tends to make a cycle. In this case here, I suspect it's going to be a cycle low. So at this stage, looks like we've got a couple more weeks, and that would also suggest that with the confirmed A to B equals CD to the downside, that December 31st area gets tested, 1181 to 1214. So I think inside the metals market, it's really all about patience or some intraday trading. Now, let's take a look at the ETFs. Let's take a look at the indices, the futures contracts, really what I should say. And, we give many give the Russell a real hard time But if we take a look at the futures contract, that's what I've got up on my screen here right now. I've got the June futures contract. And if you're watching this on Tiger TV, what you are seeing here is you're seeing a descending price channel. And a descending price channel, we're trying to use the largest number of opens or closes, what we like to call co-located opens or closes out there. You like to get at least 3 of those to identify a really good channel line out here. And along the top, in this case here, we're not using the ultimate high inside the futures contract. The ultimate high actually came in on March the 4th out here, out at the 1207.70 level. But instead, when we try to identify our channel lines out here, we'd use the open of the session from March 19th. That open was $1,200.30. What we can then use is you're basically using the close of April 1st. The close out there, 1166.70. It's pretty much using the open of April the 4th as well, and that open at 1179. And it's using the close of the session from last Friday, May 23rd? Yeah, May 23rd, last Friday out there. And that was at the close was at 1124.40. Now, what we can see here is that when we came back to work, when we came back to the markets on Tuesday, price gapped up over that rising price channel. Prices also, if you go back to the highs to the lows, meaning if we go back to the 1208-ish area down to the lows and about 1078, you'll see that price is also above the 0.382 retracement. Now, typically, when price, it's like an elevator, and you don't stop at floor 1.5, because right now that's where the Russell 2000 is at. It's at floor 1.5. It's in between the price point of 1128 and 1158 out there. It eventually wants to move up to that 0.618 retracement area. Now, is it going to make an A to B equals CD to the upside? Are we going to have a retracement and then it moves up there? I don't know the answer to that. When we come back, we'll take a look at those potential outcomes. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So before we were going into break, we were taking a look at the Russell 2000. We were looking at the daily contract out there, the daily time frame, I should say, the June contract. We saw that price broke through the descending price channel out there. That is bullish. So the change in trend, has taken place. We've seen that it's in between floors out there, and arguably coming off the bottom, it was one that was the Nasdaq that was truly crushed. You had the Russell 2000 even more crushed. Now, in the case of the Nasdaq. Let me. That's what I've got on my screen here. If you're watching this on Tiger TV, so there's a couple of interesting patterns that have taken or are taking place as we speak right now. If you go back and you take a look at the low here, I'm back on the February 5th area, and the low inside the NQ out there was down at a price level of 33.97. So it runs from that area up to a high out here on the trading session of March 6th, gets up to a high of 37.23. And then goes ahead and reverses all the way back down and does 100% move of a move. So the price comes all the way down. April 15th makes a low out there. In essence, it tests the February 5th area. And now where we're at is we're right back to the high again. So, the NASDAQ was able to recover relatively quickly. And it's also made what we like to refer to as a 100% move of a move. You see, whenever you're trading, whenever you're looking to get into a equity, one of the first things that you need to do is you've got to plan the trade out. You've got to plan it out in paper. And that planning out in paper says, okay, where's my stop going to be? And when I say where's my stop going to be, we're talking about both stops. That's right, because any good business person knows that they have an exit strategy. When you start a business, before you invest in that business, what you want to make sure that you know of is what is your exit strategy. Look, folks, I've made that mistake of not doing that. I opened up a restaurant. Restaurant business, God bless the restaurant owners out there. That is, I've been in a number of different businesses throughout my life, thankfully. And I will tell you, the restaurant business is the most difficult of all out there. I mean, you are absolutely married to that business. I got into that business, and I really didn't have a clear exit strategy involved. In fact, I would not get into the restaurant business again based on that past experience, based on what it is that I know out there. And you want to make sure, one of the most, if you take a look at successful people, before they get into any business, they have an exit strategy outlined. Well, what we do in trading and investing, you must think of this as a business. Well, the swing points are really key areas for you to focus on. And the reason is because that becomes your ultimate target for the most part. Because it's an area where there's congestion. It's an area where you've seen traders go ahead and reverse their decisions out here. Usually it takes quite an effort to get up to that level or down to that level. And if you were to, and also, if if the move is weak, you're going to take a look at some type of retracement, right? 0.382, 618, 786. Some people like to use a 50% retracement. If it works for you, use it out there. I just pretty much stick with those three. So what we have going on here right now is we've got the NASDAQ, which really is the strength in the marketplace. Let's face it. If the market's going to have this huge summer rally, guess what? It's the NASDAQ, and it's going to be the Russell that are going to participate in a big way. Well, the NASDAQ's already done that, so it's lifting all the tides out there, the NASDAQ, the S&P. But right now, what the NQ has done, what it's doing right now, no reversal signal. We have a number of different patterns that are completing as we speak right now. We've got a 1 to 1.2728 to be equals CD to the upside. That price projection, 37.45. You're at 37.25 right now. The swing point high from the trading session of March the 6th out there, again, that's at 37.23. So we're right in that range here. We're right in that range where it would be, and if we take a look at the relative strength indicator, you're up, it's bumping its head up against the overbought conditions out here. So it would be expected, and maybe it's not today because it's the end of the month, but it would be expected that we would begin to see some kind of pullback. Now, what could get in the way of that? Well, you know what could get in the way of that, and I didn't notice this, and I apologize to even to all of my clients out there because I didn't take a look at the shorter-term chart inside of the Euro-Japanese yen. I overlooked something very important out here. And what I overlooked is as it was making a low out here at 5 a.m. yesterday morning, I don't know how I overlooked this. Good Lord. Well, I know I had some computer issues, and that had my total focus out there. And in any event, and that's a BS. That's a before Steve excuse out there. Here's what it did. It made a hammer candle as it was moving down at 5 a.m. That's a bullish reversal signal. And what it also had was a price relative strength divergence pattern. What do I mean? Well, if you take a look at the low that came in at 11 o'clock in the morning on May the 28th out there, that relative strength indicator down about 27.32. When it made a lower low and it made a hammer candle, it was at 32.83. That's called price relative strength divergence. No wonder we are seeing this right now forming its first A to B equals CD to the upside. That's the fuel to say, I don't care about your 100% move of a move. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Andy Hecht has just announced a live 90-minute webinar that he'll be hosting Saturday, June 7th from 9:30 till 11 a.m. Eastern Time, entitled Energy Opportunities During the Summer of 2014. With the frigid winter having depleted some key energy stockpiles, Russian political tensions high, and the storm season for the Gulf setting up to reverberate through energy markets worldwide, opportunities could present themselves over the summer months that could provide huge payoffs. When you sign up, you'll gain immediate access to a 7-page report Andy has put together as an introduction to what he'll be covering, so you can start preparing and get a feel for what Andy will be discussing live during the workshop on Saturday, June 7th. Andy will be advising his attendees of at least one trading recommendation in each area, including crude oil, natural gas, coal, and refining spreads and oil products. The best part is that this live 90-minute webinar is only $99. Don't wait. Sign up today and reserve your spot while gaining instant access to Andy's 7-page report right now. For all the details, visit the front page of TFNN.com. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're up to the races. We got the Dow off 32 points, straight out of 16,665. S&P off 2 points, trade at 1918. Composite totally flat out here, trading out at 42.48. Russell 2000 up about a buck right now, trading at 11.41. Apple up by $2, trading at 6.37. Microsoft up 2 pennies out there. How about that? Steve Ballmer out there paying $2 billion or so for the LA which one? Not the Kings, for that basketball team. Boy, oh boy, talk about a brain fart out there. $2 billion. Clippers, thank you. Now, where's he going to come up with that money? I doubt he's got just two. I know he's got. You know, and I know his assets are plenty out there. But the question is, where's he going to come up with that cash? You know, he probably doesn't have $2 billion in cash sitting there. I'm sure he's going to sell some of his 300 and some odd million shares of Microsoft that he's got out there in order to pay for that. So that'll be kind of interesting to see what goes on, see if he's been selling Microsoft stock. Be interesting for Tom to take a look at that on his show because the Bloomberg system keeps all that stuff so updated. In any event, leading the charge, the upside this morning, Big Lots. It's up about 11%, up $4 right now. Retrofin Inc. RX. It looks like it's got a good prescription out there. It's up 23%, up $3. Madison Square Garden, congratulations to the New York Rangers. I wonder if that's the reason that Madison Square Gardens is trading up 6% this morning. It's up about $3 out there. They beat a great Canadian hockey team out there. And so, and I thought that was a team that was actually going to go ahead and take it all. So now my money's got to switch over to the Rangers out there. Really, 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 really good. We've got Cheniere Energy, LNG's a ticker symbol up 3.5%, up $2 and change. Omnivision Technologies up about 9%. That's up $1.80. To the downside, Infoblox, BLOX is a ticker symbol. Man, that is out of the blocks in a bad way, down 35% out here. CEO is stepping down. Let me see what else I've got on that. Nothing else, but it's down. And it looks like it's down with some pretty good volume off to the. Then I've got a weekly chart out here, not even the daily chart. So that does not look good for Infoblox, gapping down big volume this morning. You've got Splunk is splunking as well. It's down about 9% off $4 and change. Annie's Inc. BNNY is a ticker symbol, down 10% off $3.50. Lionsgate Entertainment, LGF, off 9%. So we've got some large percentage gains to the upside and some large percentage losses to the downside. Had a request to go take a look at a equity. The ticker symbol is NWBO, Northwest Biotherapeutics Inc. Let's take a look at it. Let's use the TAS market profile system out here. So I don't know if the request was to take a look at it from a long side, short side, or any kind of side out here. But we'll take a look at it from the sunny side. And if we take a look at Northwest Biotherapeutics, it's up above on its daily chart. It's up above the world so high. That really means it's up above its unfair high, its resistance level of its market profile, which is priced at $5.55. Right now it's trading at $6.20. What it's trying to do, it's trying to take on a swing point. That swing point being the most recent one, May the 15th. Volume on that swing point looks like about 3.2 million shares, the top of which is 555. It's got nickels across the board out there. Last time that it was up there, it came in with 2 million shares, so 2 million was going into 3.2. Wasn't enough to bust it up. That was on the trading session here of May 27th. That was at the beginning of the week. If it can get above that area, let's take a look at the A to B equals CD, volume or not. If it can get above that area, what it would do is set up an A to B equals CD to the upside. That would take price up to about the 1-to-1 takes you to $7.21 out there. It looks like that is where it would want to go on the daily. So daily is in a bullish mode out here. Let's see what the weekly looks like on this equity as well. See if this is all set. The weekly is up above a nice level of resistance. It's unfair high, which is at 602. So that is pretty nice out there. That's bullish. It's trading inside a swing point from March the 10th. Looks a lot like a shooting star candle out there. That says resistance should be up at its high, which is $10.64. Trading into that has 21 million shares on that trading session. Boy, you're into it with light volume this week. Of course, it's a short trading week, but nonetheless, that is so. So it looks pretty bullish out there inside of Northwest Biotherapeutics. NWBO is the ticker symbol. Let's go to our man Victor in Paramus, New Jersey. He wants to take a look at, I think he did, VALE. Victor, are you with us? I'm thinking that tone, not the tone of Victor, but the tone of that telephone, the answer is no. But let's take a look at Valley. VALE is the ticker symbol. Let's take a look at it on a daily basis. Gapping down this morning below its unfair low out there. That is bearish, not bullish for sure. That is at 1308 right now. It's trading at 1274. Let's see. This could be setting up. Well, let's take a look at the A to B equals CD to the downside. Swing point that you would use would be April 30th. Volume on that looks like about 25 million shares out there. So far this morning, we're looking at daily chart. So far this morning, 5.6 million shares already. 5.6 million shares. Boy, this thing is going to take out its B point, or should take out its B point. That looks pretty nasty. Let's take a look at A to B equals C to the downside. That looks like it's confirming as we speak right now today. The A point we're going to use is back here on April 8th. The B point we're going to use at April 30th as the swing. And then the C point, the numbers will just populate for me. It's real easy. The B point is at 1297. The A was at 1559. Did about a 47% retracement out here. And that was into the trading session on May 15th. That says that very likely this will do more than a 1-to-1 A to B equals C to the downside. 1-to-1 takes it down to 1160, 1-to-1.272, about the 1089 area. It looks like that is where she is headed to, and that's using the daily chart, ticker symbol VALE out there. Let's go see what else we've got moving in the marketplace. Well, you know what I want to do? Let's take a look at the Rhodes Momentum Indicator. We're coming to the end of the week, the end of the month here. Let's go take a look at what's going on inside the indexes. I've got the weekly chart right now for the S&P 500. What we can notice here is that it's making a what I call a price relative strength divergent pattern out there, the potential of that. We have not seen any kind of reversal signal, and as we speak here on the weekly chart, we've got a nice little gap up, little rising window this week. Of course, that was expected with our markets being closed on Monday. Price is up above its shooting star, its resistance level. That was the candle session from April the 4th out there. The high, whoops, I didn't want to do that. I wanted to do this. The high of that shooting star, which should become support now, 1897.28. You are at 1917 right now. So weekly chart, this pattern, by the way, can't be resolved. So until the bears show up, it is a bullish chart. If we take a look at the monthly chart, let me grab a drink here. Monthly chart as well, showing the potential of a price relative strength divergent pattern, but you can see other than that potential, there's no resistance. It's in full-blown bullish mode as we end the month of May out here. It is a fabulous-looking stock chart. The daily, if I put the daily chart for the S&P 500, no resistance in sight here whatsoever. So unless you're trying to sell a top tick out there, the charts are bullish on the daily, bullish on the weekly, bullish on the monthly. And if I just take a look at the ES Mini on the 120-minute time frame, let's just pull that up here. It's bullish on the 120-minute time frame. It's got a price relative strength divergent pattern, but you see it's really trading inside. Let me put my cursor up here, my crosshair. It's really trading inside this candle from yesterday's 4 p.m. time frame against a 2-hour chart that we are taking a look at here. Price trading with inside this, if it closes above that high, which is a price level of 1918. You're at 1916 right now. Close above 1918. Is actually a nice continuation pattern to the upside inside of the S&P futures. So we're taking a look at bullish signs across the board out there. Let's go back and let's take a look at the weakness out here. Let's take a look at the Russell 2000. We're going to switch and we'll start off by looking at the monthly chart. So let's go see what the monthly chart for the Russell 2000 index shows us. And if you were to take a look at this, as beaten down as the Russell 2000 was, it had, last month, no question about it, the month of April, gave us a reversal signal. Now, that reversal signal is what's referred to as an evening star pattern. It's a minimum of a 3-candle formation out here. Now, and this is the month of April, so it had a bearish reversal signal, but no follow-through this month. No follow-through. The candle pattern is still valid. It hasn't been taken out. It's got resistance. What you expect to see on reversal signals is you expect to see follow-through the next month. Hey, let's face it, intersession, meaning intra-month, it did get pounded, went down, and really just tested its 8-period exponential moving average at about the 1089-ish type level. But it just simply bounced off of that area. And this stock chart, although it's got some cautionary sign, it's still on the monthly chart in nice, big, full bullish mode out there. That's on the Russell 2000. Weekly chart a little bit different story out here, but what it did last week as prices were making lows, it had a nice little bullish engulfing candle, and a strong one at that on the weekly chart. Why do I say strong one? Because it engulfed the prior 2 weeks' sessions out there. Right now, today, it's it's trying to actually what it needs to do on the weekly chart to really get out of Dodge. This is the Russell 2000 index. This is a cash index we're looking at. 1160.40 out there. So it's got about 20 more points before it really clears the woods and gives you on a weekly basis a nice little buy signal out here. But it's suggesting that it's got a nice little bottom that had a hammer candle down here. This is on the weekly chart. February 7th, price had come down. As it was coming down, it was the bulls. It was the bulls that had formed that hammer candle that were saying, I don't think so. That's our front line. You can give me the best you got, but it ain't the best to be able to overcome. And that's exactly what took place out here inside the weakest index, and it's showing some nice reversal signals out here as we speak right now. On the daily basis, the daily chart here showing that it is actually, when you see a blue area here on the daily chart as it was forming its lows on May 15th, it also formed a hammer candle, was one I was suspect of, but on the very next trading session, a bullish engulfing session, and basically the sign builders of the market were saying, hey, Steve-O, we heard you on that radio show on May 15th, and they said you were suspect. So we went ahead and built you another sign. It was called the Bullish Engulfing Candle. That was on May 16th. So the Russell 2000 has hammered out a low pretty nicely. And as we took a look at the futures index out there for the Russell 2000, it's at kind of mid-stroke, and it eventually wants higher price. Now, remember, we took a look at that 100% move of a move inside the NQ. With it being the strongest, I said there was that potential that we would see the market pull back. I don't know whether it's going to do that today. Dow's off 42 points or not. If it does, it really should be our expectation, right? When you get the leader in the group up and making patterns, several patterns out there, our expectation should be that we would see some type of retracement. Some type of retracement, whether it's today, tomorrow, Monday, Tuesday, some type of retracement. And boy, if you want to know what the most bullish thing you could see here, it was that Euro-Japanese yen going ahead and forming a nice bottom out there and deciding to move higher and have our markets go ahead and pull back and give us a little bit of retracement for a nice summertime rally, which is what I continue to suspect, and I've been saying that really since that February 15th or April 15th level in the marketplace out there. So on the Russell 2000, we've looked at multiple time frames. It looks pretty good out there. I believe there was a request to take a look at Netflix. So let's go take a look at the Netflix. Let's go see what it is doing. Ticker symbol on Netflix is NFLX. Let's go take a look at the market profiles out here. Let's take a look at the daily, weekly time frames. Let's go see what it is doing. Yesterday, getting above its unfair high. That puts it into a nice bullish mode out there. That was at 405.20. It's at 419 and a change out here. Where's it likely headed to? Should find the resistance out here at this darker blue line going across my screen around the 449-ish type area. Probably headed back to where? To its swing point, just as we looked at on the NQ out here. Exit strategy, exit stage right, ought to be right around the swing point from March the 6th out there. That price level is 458. No real, well, I guess there's an A to B equals CD to the upside. Most certainly, let's take a look at that. Although it looks like it's it's definitely an extended one, because your A point would be down here on April 28th. Your B point would be the high on May 6th, and then the C point would be the retracement into May the 8th. At this stage here, Netflix has done a 1 to 2 A to B equals CD to the upside. Looks like it just continues to want higher price out there. If we take a look at the weekly chart for Netflix out here. Netflix on the weekly chart is in full bullish mode. Did that last week when it got above 385.05 out there. So that is up nicely. That's a weekly, daily. Let's just go ahead and see what the monthly chart here looks like for Netflix. The monthly, see if it's also above any kind of resistance or if it's running smack dab into it. Give it just a moment here to populate. There we go. And, right now, so it's really trading right into it. So the resistance level on a monthly chart is 414.68. This is traded at 419 and change right now. So it's looking at pretty good monthly, weekly, and daily. And the question inside the den is what charting service am I using that I'm showing here right now? This is the eSignal charting platform out there. eSignal has been my data provider for God knows how long, because I don't remember, but my bills do. And now I am really integrating, moving over to using the full-blown charting system out there. Yes, it's a very good tool. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Welcome back, folks. Dow's trading off 35 bucks right now, trading out at 16,663. S&P off a point, Russell down a point, Composite off 4 points as we speak right now. If we take a quick peek here at the VIX index, trading at 1160. It is well below that 50-day exponential moving average. That's out at price point of 1324. So plenty of liquidity, plenty of reasons for the markets to move higher, drift higher, regardless of whether there's any volume behind the move. The dollars have got to go somewhere, and they're going to go into the stock market as long as the liquidity gauges are pointing in that direction, and they most certainly are. When we take a look at the euro, Japanese yen, can't form a hammer candle this morning. It's already kind of blown that opportunity, but it could form a morning star pattern by closing, ideally above the 138.78-ish type range out there. So we'll pay attention to this, but so far as we speak right now, of course, we're at 9:55. This has been trading all night. It's got the potential. It's got some merits, especially because of that price relative strength divergent pattern that we saw inside of the 120-minute chart out there. Those are good bottoming patterns. So the combination of the intraday time frame, the 120-minute chart, along with what we've been looking for on the daily chart. Now, what we're seeing here is off of that hammer candle, off of that bottom. It's gone ahead and made a 1 to 1.272 A to B equals C to the upside. The actual price projection on that is 138.75. It missed it. It got up to 138.755. No, it hit it right there, right on the button out there. So it's not overbought at this stage, so it's got some room to continue to run higher. And it finishing up at its session highs would be extremely bullish out there. So you'd love to see this currency pair start to move topside and see the market pull back a bit more. That would set up a nice buying opportunity going into a nice summer rally out there. On a more as well as other bullish signs would be a pullback today. So if you're bullish in the market, I know you don't want to see this or hear this, but actually the most bullish thing that you could have take place would be the pullback take place today and on Monday. Because we're into the summer trading season. Volume ought to be light. If we go take a look at the ETF structures out here, let's go take a look at remember, we're focused in on the NQ, so let's go take a look at the QQQ out here. volume so far this morning, about 4.6 million shares out here. What you'd really love to see it do is come back and test the breakout, the most recent breakout area, which is the gap up from over the weekend out here. So come back and test the 90-20 area, maybe the high of 89.90. Do that with light volume between today, Monday. That would be a nice, if we can pull back on light volume, that will be the signal out there. And it'll move, it'll go ahead and get rid of some of the overbought condition that is inside there. If we take a look at the SPY here right now, the SPY is basically, trading out at 192.23, no reversal signal or anything. In fact, what the SPY did yesterday, the SPY actually took out a 1.272 butterfly pattern out here. That that completed at the 192 level out there. I suspect, that what the SPY actually wants to do, well, it's really what it wants to do at a minimum is get up to the 195 area. The reason why I say minimum is because of that consolidation pattern inside of the ES Mini. And that consolidation pattern says that the ES Mini wants to actually trade up to 1957. That is another 40 points higher to where we are at right now, 1957. And really, quite frankly, it could go even higher than that. Let's take a look at the A to B equals CD. Oh, I hear the music. That means my week is over with you. And I'm sorry for that. But I do look forward to seeing you on Monday morning. Stay tuned because the Nadex Bull Bear Binary Option Hour is up. Our man Tom O'Brien and Daryl Martin. Have a great weekend, folks. I look forward to seeing you Monday morning. Take care now.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.